There's for him.
So everybody, can you all see my screen, please? You can see my screen, just say I in the comment section. You know how we run this. That's amazing, bro. So we have a big
Millie.
yeah, bro. Yeah, I can hear you.
Millie.
Yes.
Yeah, scroll to the bearish market stuff first. So that's where we are going to
Yeah,
start.
right.
No, bearish. Yes, that place.
Okay, sir. Yeah. So I think we are good to go now.
Thank you.
So everybody, I'm going to invite
Yes.
our one and only boss. Nobody is actually small in this FX industry, you know. We have our giveaway already. So I just want all of us should be patient enough and listen, because today was actually one of the best topic you will always listen to. And so it will be so interesting too, because we have one of our own best, is boss. So, and we are sorry for the delay, and we are so sorry. We had to fix some stuff before we can actually be like, get everyone back. So, my brother, so you are welcome back.
Thank you. Yeah, good evening, everyone. So my name is Tim Z. So we don't have more time. Like, let us get started. This will be the 4th day of this summit. So today we are talking about fundamental analysis. So yesterday is about today we are talking about technical analysis. So yesterday was about fundamental analysis. So it is very important in markets. Technical analysis. This is when it comes to when the trader use the past historical data of the market to analyze the future move, or to predict the next move of the market. So do you understand what I mean? Oh, you might not understand, but I will explain it. Like day before yesterday as well, Mr. Hani talk about market structure and all that. So today I'm going to explain everything about market structure, and I believe you will understand. So do anyone know how to identify market structure? So I want a yes or no answer in the comment section. Like, can you identify market structure? You people are not reacting. Like, I'm asking you the question. Can you identify when the market is trending, or you can't? I want a yes or no answer. Okay. Some people have been reacting. Yes, no, yes, no. Yeah. Okay, that's good. That's good. I've seen some people that react already. So let's continue. The thing is, there's two basic terminology. You guys are amazing. So I will share it tonight with you. And the terminologies are bearish market and bullish market. So what do I mean by bearish market? So bearish market is when the market continues to make a series of lower high and lower low. When we say the market is trending, you will see it will keep making, like, it for the bearish market, it will keep breaking down the lower low to form a new lower low. So bearish market is the opposite of bullish market. It means you expect the price to go down. That's it. You will just see the price will continue to head downward. The price won't move. The price doesn't move on a straight line. Get that right. So it moves like this. Once it break the lower low, it will retest back to form a new lower high. So after it formed that new lower high, it will continue to head down again to break down that recent lower low. So that's how the market will be going downward gradually. Bearish, okay, this is expecting the price to fall. Like I said, the price will keep heading downward. So the market is falling. If you are bearish on GBP USD, so that's a currency, that's a pair to trade. Like you want to trade now, you want to trade GBP USD. So and you want to go short, and that means you want to go bearish. You believe the British pound will decrease in value. That's the base currency. That's GBP. It will decrease in value against the US dollar. That's why you are shorting the market. So we call it bearish market. So like you may be somewhere maybe around traders, and they'll be like, okay, today, like this common pair like BTC USDT, and they'll be like, okay, today market on BTC it is bearish. So by now you will have understand what they are saying. So the market is decreasing in value. That's what they are just trying to say. Get the terminology now. So let's go to the bullish side. The bullish is the opposite of bearish. So the bullish market, Millie, please to the next page. So the bullish market is when the market continues to make a series of higher high and higher low. It's like word and opposite. Bullish is the opposite of bearish, and bearish as well is the opposite of bullish. This is it. When I'm explaining the bearish market, I said the market continues to head down. It continues to break the lower low to form a new lower low. In a bullish market, it will continue to break high, like it will break the recent higher high to form another higher high. So that's how the market will keep trending up. It will be going upward. You will see there will be increase in the price of the market at that particular moment. So that's not the only thing. You need to identify the market structure. You need to understand the candlestick as well. And we have chart pattern as well for technical analysis. So, okay, thank you, my boss. What is candlestick? Each candlestick represents the price actions of an asset during a specific time frame. Yes, it takes specific time for each candle you see on your chart to form. So when we are analyzing our charts, called is it up to down analysis? Okay, you might not get familiar with that now, but later I believe you will understand better. So this is when you are switching from time frame to time frame, like from bigger time frame to another, to see the clear picture of the market. So you will start from the bigger one, like this. This is daily. The bigger time frame here is a daily time frame. So when you want to analyze, you start from a bigger time frame. You see the picture of what have happened, like a day back there. So each candle you see on that time frame, take a day, 1 day for each candlestick to form. So, and when you move to hour time frame, like 1 hour, 4 hour, like that, each candlestick as well takes 4 hours to print each candle. And for the 1 minute as well, it took 1 minute to form for each candle. So tonight we are going to study the anatomy and the structure of the candlestick. So to study the candlestick, it has like our part of body. So that's the same way the candlestick has its own part of the body. So I will explain that right now. So the candlestick has a body. That's the thick part of the body. It has a shadow. It has wick as well. So the feed part of the body, that you will see it like this thick. I will still show you the example, don't worry. So the thick part of it, that's the body. And we have, like I said, we have bullish market and bearish market. That's how we have a bullish candlestick and a bearish candlestick. But sometimes we use color to represent each candlestick, and most time the color doesn't matter. So but for the sake of this class, for bullish candlestick is green and white, and for the bearish candlestick is red and black. So How to know a bullish candlestick? When the close price is above the open price, that's a bullish candlestick. And for the bearish, when the close price is below the open price, that's a bearish candlestick. The color of a candlestick is of the bullish candlestick is often green and white. White for the bearish market is sometimes red and black. So it depends on the color you choose. And the wick, that's not the all about the candlestick. So we have wick as well. It's also called the shadow. So the upper shadow, like the upper wick, like this, it's just like a straight line. You will see it straight line like this. That shows the highest price the market reached. So for the lower wick as well, the lower price the market reach at that particular moment. Please to the next page. So yeah, why trader use candlestick? It is easy to read. It show momentum, help to identify pattern. So like I've said, before you can do anything, maybe before you want to trade, you have to understand what is going on in the market. You start from the trend. So after you identify the trend, before you can, okay, I want to buy or I want to sell, you need to wait for your confirmation. And most traders use candlestick for their confirmation. If not everybody, like it's it almost everybody they use candlestick. So when the candlestick form, they already know, okay, this is what to do. So we have different type of candlestick. We have doji, hammer, engulfing, shooting star as well. So this is example of doji. You can see. You see the line that goes up. That's what I'm talking about the wick. So that's the highest price the market reach, and the one at the downside, that's the lowest side, is called the wick. You see, you can see a color red and green. So that's the body, but this is a little body for this candlestick because it's just like a plus sign in the market. You see, when this candlestick form on your chart, maybe near a resistance or at the top of near a resistance at the top of a trend, it signals a reversal. So trader that already knows it, they may go short in the market. So this is hammer as well. You can see it. You see the body is increasing small, right? So you see the wick, the long wick, that's the low wick. You see the open price and the close price. For the green one, you see the close price is above the open price. That's a bullish candle. And for the other one as well, the close is below the open. That's a bearish candle. So on to the next, my boss. Hey, you see, this is engulfing. So this one you can just do yourself a favor to identify, or if you have time to identify, or if I didn't know if you have a platform to check that, you can just identify all these candlestick on your own. So this is engulfing candlestick. This is how it's used to form. Let's say it's like this one now, it's formed around at the top of a trend. So when after the bullish candlestick has already printed, so the next candlestick that form, it will be a bearish candlestick, and it will close, like it will start from the close point of the bullish candlestick, and it will close below the open price. It's like it will engulf the body, like when we put a small thing beside a big thing. That's how it's used to form. And it's also a reversal candlestick as well, when it's formed maybe at the top or at the bottom of a trend. So it's signal a reversal. Traders know how to trade it. So right now we are going to move to chart pattern. Okay, this is another candlestick as well. Don't worry, chart pattern. So chart pattern is a technical analysis. A chart pattern in technical analysis is recognizable shape or formation on a price chart that helps trader to predict future movement. You see, like I've said, using technical analysis. This is when traders use the past historical data, the past events that has happened in the market to read and predict the next movement of the market. So chart pattern is one of the tools like that the trader use as well. So these patterns are based on price movement and are used to identify potential trend continuation or reversal. Like I said, so we have different type of chart pattern. We have double top, double bottom. We have um reversal, a lot of chart pattern that we have. So it depends on the one you want to learn. And again, Mr. Nii said something about this. He said either on a resistance zone or on a support zone, the the amount of time that the market come back to it, that's how strong the level is going to be. Yes, that's what make this work on chart pattern like this for the double top, for the double bottom rather. So let's say this there is a specific level on the market chart. So the market has already bounced from there and fly. So over the time, the market come back to that level again or so. So once it come back and it is able to bounce back again, that zone is becoming stronger. The amount of time that the market comes to that zone make it strong until it break it out. That's it. So here, common type of chart pattern, we have continuation pattern. Signal trend is likely to continue. So this one, if you see this kind of chart pattern, definitely the previous trend is likely to continue. We have flag and pennants, small consolidation after a strong move, then breakout in the same direction. We have on the market, we have something we call in the market, we have something we call consolidation. This is when the price it won't move that fast. It will just be like moving up and down within limited space like this, moving up and down, moving up and down for a specific time. And once it break out, so the journey continue to any side, but for this one to the side, to the previous trend side. So let's say the market has been bullish for a while. So we now notice there is consolidation on the market. The next time that the market is breaking out, it will continue bullish. It will break out to a bullish side as well. We have rectangle, price move sideways before breaking in the direction of previous trend. So we have ascending and descending triangle indicates continuation depending on the direction of the breakout. This one actually happened. You can't predict this one, but you just have to wait for the breakout before you can go. Either you want to go short or you want to go long in the market. On to the next page. I will show you an example of all this. Just be patient with me. So this is reversal pattern. Signal a trend may be ending. Okay, like we have been bullish for the whole day, and this pattern form at the top of a chart or at the bottom. This signals that the trend is over. Maybe the buyers are weak in the market and the sellers are in the market. So the trend will reverse. It will change direction from bullish to bearish. We have head and shoulder, inverse head and shoulder. Signal a trend reversal, bearish or bullish. So the head and shoulder, that's a bearish, and the inverse head and shoulder is for the bullish. We have double top, double bottom, price test the same level twice and reverse, like I said. So when like the market has already tested a specific zone and fly from there, and over the time it comes back to that zone again and then fly again. So that makes that level strong. So we can enter a trade from there. So we have triple top, triple bottom, strong reversal signal, that double top and double bottom. You see, this triple top is exactly the same with the like double top as well. You see, triple top. What makes it different is that the amount of times that the markets come back to that specific area. That's what makes it different. Okay, on to the next page. I think we have the example next. You see, this triangle that we are talking about, when the market is moving sideways, so the market, it may either break to either side of the market, but normal, this one should break to the bearish, to the bullish side, like you see. So that's the example. It will be like it has a number of times, like when the trend is coming, let's say it is bullish and it touched the trend line for the first time. So it touches the second trend line again. And the third, like for the fifth time will be the breakout. So this is head and shoulder pattern. You can see we have left shoulder, we have the head, we have the right shoulder. So to trade this kind of chart pattern, you have to wait for the breakout of the neckline. So that's when you can go bearish on it. You can go short or you can go bearish. And for the emphasis as well, that's from the bottom of the chart. It will go long after the breakout from the neckline. Next, my boss. Mainly, so you can see we have we have different type of chart. This for continuation pattern. We have ascending, descending, symmetrical, expanding. A lot of them that I don't even mention. So moving to moving average, there is a tool called indicator in the market. So most traders use them and most traders don't use them. Someone like me, I don't use indicator. So I'm not used to it. Please, my boss, move to the indicator and the moving average. Yes. Okay, what is moving average? Moving average are one of the most commonly used technical indicator. So most traders, when it comes to market, like they can't actually predict the next move of the market, but with the help of this indicator, like they have to study it. It's not that they just rush to it like that. They have to study it and make their settings about it. So for it to work for them perfectly, and it's not 100% sure at times. So, and most of these indicators, they lag behind. I don't know how those people cope with it, but it is useful. You might find it useful for yourself. So moving average is a simple way to smooth out price fluctuation to help you distinguish between typical market noise and the actual trend direction. That's what traders use indicator for, to know the trend direction, to know the direction the market is heading to. Like this, like for this moving average, we have, when they are setting is, they do set 50 moving average and 20 moving average. So they be like, when the 50 cross the 50, so you can go bullish then. And when it calls, when the 20 cross above the bullish, like that, you can go bullish that time. This is an example. You see, there is a green line on the chart, as you can see on your screen. There is a blue line rather on it. That blue line is going up and down. It's going like it's at the top in some places and it's at the bottom of the chart in some places. That's how it works. When the moving average is at the top of the chart, that means the market is going bearish. But the issue there is that this moving average, it doesn't form quickly. It lags behind. Maybe after the trend has already been moving, that's when it will show. I didn't know how those people that use it, I didn't know how they cope with it. So as you can see, the moving average looks a sluggish line overlaid at the top of the price, represented by Japanese candlestick. So more on moving average. Like every technical indicator, a moving average indicator is used to help us forecast future price, to know the the future direction of the market, where the market is likely to head to next. So moving average help to smooth out price action. Like I said, there are different type of there are different type, and each of them has its own level of smoothness. Like I said, we have like they do set 50 moving average and 20 moving average. I've read about it, I've learned about it. So generally, the smoother the moving average, the slower it reacts to the market. So we have type of moving average. So there are two major type of moving average. We have the simple and exponential moving average. So that's all about for tonight. Like, do anyone have question? And I hope you understand the little I just explained to you guys.
No. Yes.
So thank you, everybody. This was actually amazing because our brother actually explained a lot of things for us. So if you understand, can you nicely I in the comment section? Please, let me just see I, man. Wow, that's amazing. So my brother actually, this was actually this. Actually, like maybe we should begin to use that. Yeah. Felua, I understand exactly what you mean, but you are new user to it.
Millie, wait. You can't really understand when you are not familiar with the market. When you are not familiar, you won't really understand until you're familiar with it. There are some trader like Millie right now. Once he open his computer or his system or his machine, whatever, you already know, like when you look at the chart, you already know what is happening in the market without placing any trend line or any support or resistance. Until you get familiar with the market, that's when you will understand better, my boss.
Exactly. So I think Ifeoluwa, I think my brother has just answered your question right away. Yes, exactly. So the more you pay attention to all these things, like you go over it and over it, then it will be so simple that you yourself will feel like, wow, I think this is even the simplest thing. So that was just about that. This class is actually been like it's going to be in a two because two people are going to take us tonight. So the second person is actually the boss of bosses. When I'm talking about the boss of bosses, I'm trying to introduce you like someone all of us are still going to learn from him. Like he's the best. Trust me, he's the best. Like me myself, we even learn from him because everybody always learn from each other. I don't think there is a boss in this FX. You can come tomorrow and you can be the boss. So, and we are sorry for the late, like we start everything late. So I'll be sending another link. So I'll be sending another link straight away immediately I end this call. So I'll be sending another link. You understand? Please, if you hear me clearly, please can I just see I in the comment section? Tonight is fire to fire. One section has gone, another section is coming, bro. So this other section was actually fire. It's going to burn everything. So tomorrow, I still that tomorrow say we can't even compare it together. Wow. I love I love the energy. Sorry for that. I love the energy. I love the energy. So my brother, see you guys in 2 minutes. I'm going to send another link. Please just make sure you join and make sure you join as fast as possible. Please, it's very, very important. So see you in next 2 minutes. Appreciate. Big love, man.